Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Monday. It's October 10th, 2022. Oh boy, it's going to be a really busy week. There's a lot of stuff on the table. We've got a lot to talk about. Folks, thank you so much for liking, subscribing to this channel. Please comment below this video on the YouTube channel. I will personally respond. I will like it, and it helps us drive more traffic and it answers questions. And if you want to get a hold of me, support at marketgeeks.com. Now let's get into today's video. So as you can see here, after a 600-point move in the Dow last week, we are pretty much flat. I mean, this is just random trading action. There's a lot of data to digest this week. First of all, we've got earnings. So you've got some random companies coming out on Thursday. You've got Delta, you've got Progressive, you've got Taiwan, you've got Walgreens. It's kind of all over the place. I mean, these are big companies, but this is the start. And as I said, the numbers have been beaten down to death. I mean, they are really in the toilet right now. And on Friday, we officially start the earnings season with the banks reporting. It's usually on a Monday, but I guess this time it's a Friday. The JP Morgan is the big one. They're expecting right here, you could see $2.91 per share. You may want to write this down. Negative 22% for the year on revenue, higher revenue, which is really interesting, I think. But that's what the expectations are. And here are other bank stocks and healthcare companies, but these are the companies that are coming out on Friday. And you could see here, Citibank, $1.61. This is what's baked into the price of the stock. So you may want to take a screenshot or a screen share or copy this down, because if the numbers are below this, that's negative. And if the numbers are above this, it is positive. So it's really important to have this number. That's why I'm keeping my page open for a little while. So again, you've got Thursday, BlackRock, Delta, Progressive Insurance, Semiconductors, Walgreens. And then Friday, we turn attention to bank stocks. And that'll be really important. And as you can see here, Wells Fargo's expecting $1.09, US Bancorp $1.15, Morgan Stanley, one of my favorites, $1.53, Citibank $1.61, and $2.91 for JP Morgan, which is going to be the spotlight stock. So Thursday and Friday, things are going to start heating up in terms of earnings. Now, in terms of the Fed, and this is really important, we're going to have the PPI and the CPI this week. Now, usually the CPI comes out before the PPI, but this time the PPI comes out before the CPI. The CPI, and then we have the minutes from the Fed on Wednesday as well. So it's going to be a really important week for the bond market and for financials. Now, as you can see here, nobody cares about month over month. We're looking at year over year, and we're looking for this number to go down. It was 8.3 prior. Consensus is now 8.1. And again, ex-food and energy they're always expecting this number higher, which is really weird, because food and energy has actually been coming down the last couple of months. If you look at it from an all-time high levels, inflationary pressure has been subdued somewhat. But they're expecting this number to be 6.4 to 6.6. I'm hoping this number is lower. If it's lower than 6.3, there's a chance we have peaked. If not, it's not going to be pretty. And then year over year, the full number, they're looking at this number to be the highest. And this number appears to have peaked, but the core has not, and the core is what the Fed looks at. They're looking at year over year. They're not looking at month over month, so don't even pay attention to month over month. Just year over year, the CPI and the core CPI. Those are the biggest factors the Fed is looking at, and we're hoping that this number is 6.2, 6.1. Anything below 6.3 would be really beneficial for us right now. So that's going to be important. Then you've got retail sales. It would be really nice to have retail sales before this report, but I'm hoping that this will show that the market has peaked. And remember, folks, today we have Indigenous People holiday. It used to be Columbus Day, so we have a bank holiday. So expect the bond market to be a bit muted. Now, the bond market has unfortunately taken on a progressive approach, as we have seen. I was hoping it would be a choppy approach, and it looks to me like the stock market isn't cooperating as much either. But it looks like we're still here in near this range. And again, ARK, Cathy Wood stocks, looks like they're still in that range. So there's still a really good chance we might have peaked out and have bottomed out in terms of small caps, which have actually topped out about a year before the rest of the market did. So this is why we're looking at these stocks, because these are hypersensitive stocks and they're hyper speculative. And hyper speculative stocks tend to go down up first and down first. And they haven't been able to break the level. They're at that level, but they haven't been able to break lower. So pay attention to that. In terms of the NASDAQ and the SPY, let's see if we're still within that range. Now, it looks like we're just getting out of that range. It could pop up or it could be a low right here. But I'm telling you right now, there's something interesting happening right now, and I want to show you. The spider is still within this range. As you can see here, we're still within this range, which is really important. We're holding on, which means we haven't gotten much lower than the low we made in June when we thought the U.S. market was bottoming. This is the bottoming of the global market. Big difference. Now, here's what you need to understand. Put to call ratio is still hyperinflated. We're still above 1, which means we still have a lot of upside to go. Now, here's where things get really interesting. The 50-day, the stocks trading above the 50-day moving average are now finally, except for energy, which, look at that, all green, love it. 50-day stocks are now lower than the 200-day stocks. Remember, this is investment. This is reactory. This is just emotion. And typically, when you start seeing the 50-day stocks below the 200-day stocks, that means that it's time for things to bounce. And, I mean, look at this. Let me just show you this. This is low. Like, these are real low momentum levels. We are low. This is, we are now, look at that. Like, this is 2008. Just to give you a perspective, 2010, we're there. We have bottomed out. So I'm expecting the market to start moving higher. If you look at the NASDAQ, you will see much of the same thing. You're not going to see anything really all that different. I mean, we are really low right now, folks. This is not a time to go selling your portfolio and liquidating things. I mean, we look like we've bottomed out. Look at 2008 and look at where we're at right now. And if you want to see the 200-day moving average, and if you think it looks any different than this, it really doesn't. Let me show you. Look at that. I mean, this is awful. I mean, we are in like stretched out. Let's talk a little bit about global economy, and then I'll talk about sectors. So, oh boy, China has been in a lockdown due to increased COVID cases, something we don't want to hear. U.S. jobs report added more worries that the Federal Reserve might consider higher than expected rate hikes, because the report is showing that that people are working. So that means they can go a little more, they can increase a little further. U.S. consumer price report on Thursday, that's the CPI, will be one of the biggest factors for the market this week. That's the last CPI before next month's rate hike. So this is really important. Last Friday's job report was the last job report. Investors also waiting latest update on how companies are dealing with higher prices and interest rate hikes. That's the earnings that I was talking about that's starting this week. Chinese cities were imposing more lockdowns and travel restrictions after a number of new daily COVID-19 cases tripled during a week-long holiday, ahead of a major Communist Party meeting in Beijing. Not good. The strict zero COVID approach has taken economic toll, particularly on small businesses and temporary workers. Many in China hope the pandemic policy will ease after the meeting, and that's happening this week. Makers of semiconductor and chip manufacturers also suffer heavy selling after U.S. government tightened export controls to limit Chinese ability to get advanced computer chips, develop and maintain supercomputers, and make advanced semiconductors. Oh boy. Prices have been rising in Japan, pushed higher by global inflation. They're not doing what we're doing here. But the Bank of Japan has stuck to its ultra-loose monetary policy, while the Fed has pressed ahead with sharp rate hikes. I think neither extreme is any good. The U.S. government report showed employers hired more workers last month than economists expected, and that might clear the way for Fed to continue rate hikes. That's what I was saying. The job report was too good. And if they continue doing what they're doing, it's going to put us into a recession 100%. Employers added 263,000 jobs, less than the hiring pace of 315, but above the 250 that was expected. If the number was below 250, I think the market would have actually not gone down. Oil prices are again under fire, and I told you guys, it's foolish to think that this rally in the oil market is over. The war needs to cool off and inflation needs to cool off. Neither has. So again, big deal. Big report, CPI, big report, retail sales, consumer sentiment, not such a big report. Import-export prices, big. FOMC minutes will be interesting. Expect subdued trading session today. Now, in terms of stock fetcher, the number of stocks making 20-day breakdowns is high. It's 173, but it's not 600 or 700. So the market is still somewhat stable. It's not completely out of control, and it can't turn around, meaning momentum levels are not crazy. We're not seeing 400, 500, 600 stocks. You're still seeing energy, healthcare, and consumer staple lead, and you're seeing technology and communication services and soon to be consumer discretionary on the bottom, as I predicted. Utilities has me a little worried, but I think it's going to start coming up because prices are not cooling off anytime soon. The key right now on the SPY, and I'm telling you what those levels are right now. I want to see the SPY, SPY. I want to see it stay above this area. I want to see it trade above the 360 level. I'd love to see it break above the 380 level. On the QQQ, I want to see us stay above or go back above this level. It's kind of broken just a bit, but I think we can go back to the 280 level. That would be great. And on the Dow Jones, I'll tell you what that level is. On the Dow, we need to go above 30,000. Anything below 30,000 is very, 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 very bad. Now, folks, it's no secret. We're in a tough economic and market environment. And the daily volatility and uncertainty outlook can be very, very stressful, even for seasoned traders, which is why I've been researching a way to simplify investing to slow it down. And what I've uncovered were 5 stocks that never lost during a market crash since 2000. And they've all also outperformed the S&P by more than 3,000%. And I truly believe they're positioned for another strong run for years to come. Now, these stocks are part of what I'm calling the ultimate portfolio. For more details about the research and the stocks in the portfolio, click the link below. You do not want to miss this out. Check this out and do it now. Folks, it's going to be a crazy week, probably starting tomorrow. Today, a little more subdued because bond market's closed, so stocks can't get their directional bias from the bond market, but I am expecting stocks to start cooling off and going higher. I think 95% of the negative data is priced into the market. Now, follow the link below. Post comments in the YouTube Wealth Press channel. I want to hear from you. Bye. Have a great, great day and a week ahead.